If you're buying a home and I offered you twice as much house for a quarter of what you're paying, you'd take it, wouldn't you? And when you got your mortgage, if I told you that you could pay less than half of what you're paying for twice as much mortgage, you'd jump at that opportunity, right? Well, you might be able to save a bundle of money that you could use to pay your home down years sooner or for anything else that matters to your family. There's likely something else you got when you bought your home and took out your mortgage life insurance. Many Canadians take that mortgage insurance when it's offered to them as they buy their home. It seems like a sensible way to care for your family and protect them. But did you know that if you have mortgage insurance, you're very likely paying far more to protect your family and your home than you need to, and you may not even be covered. In fact, you may be able to have more and better coverage, be absolutely certain that you are covered, and pay up to 75% less than you're currently paying. How's this possible? Well, let's take a look at how mortgage insurance works. When most people are taking possession of their new home, there's a lot going on. You're moving, you may have sold your existing home, home inspections, home insurance, realtors, lawyers, bankers. It can be a lot to deal with. When you went in and signed your mortgage papers, the bank employee or mortgage broker likely offered you mortgage insurance. It seems so simple. Select a checkbox, answer a few questions, and we're covered. It's just so easy, but it might be a little too easy. For most people, that same amount of coverage could be obtained for much less money, in some cases up to 75%. And did you know that the cost of mortgage life insurance doesn't vary between men and women, but regular life insurance does? Women often pay a third less for the same coverage that men do. So women, you could save even more. And did you know that you likely don't own your mortgage insurance, your bank does? Should you pass away, it's unexpectedly. It's the bank that will get the check, not your family. Yes, the bank will pay down your mortgage, but maybe after taking a hefty penalty from you. What if your family needed some of that money for other purposes? And you probably didn't think about how much life insurance you were actually getting with mortgage insurance. You likely assume that if you have a $250,000 mortgage, you're getting $250,000 worth of insurance. And that's true in the first month. But the amount of insurance coverage that you have with mortgage insurance declines every month, even though the payments stay the same. How can that be? The reason is that the mortgage covers the outstanding balance of your mortgage, the insurance. And that mortgage balance is going down every month that you make a payment. So if your mortgage started at $250,000, you've been making payments for 10 years, you might only owe $150,000, and good for you. And you may think you still have $250,000 of mortgage insurance coverage because the payments have stayed the same, but you're really only covered now for $150,000. And what happens if you decide to switch mortgage companies? You'll likely have to apply for new mortgage insurance coverage, and if you've had any health changes or events, you may no longer qualify for that mortgage insurance, or any insurance. If you buy personal insurance, you're covered for the full value of the insurance, no matter how often you switch mortgage companies for the full term of the policy. Here's the scariest part. When you answer those few questions, that policy is issued without any review. The bank clerk can't tell you if you answered the questions correctly. They're not an insurance professional. The mortgage insurance company will only do a review when you make your claim. Now, perhaps there was a small mistake or oversight in answering one of the questions. With personal insurance, that mistake would have been corrected when the policy was first issued, and the insurance company is bound to pay any claims, even if the mistake wasn't discovered then. But with mortgage insurance, that mistake only comes to light when the claim is made, when the person that answered the question has passed away and isn't there to explain. And based on that mistake, the insurance company may well decline to pay. All that they'll do at that point is refund the premiums you've paid, and your family's without protection when they really needed it. If you think this might be an exaggeration, take a look at some of the investigations into mortgage insurance by CBC and Global News. We'll put links in the comments. So what can you do to truly protect your family and save many thousands of dollars over the life of your mortgage? It can still be simple to get the insurance coverage you need. Take a moment to check how little coverage might cost you. Imagine if the insurance coverage that you could now own to protect your family and your home cost less than 30% of what you're currently paying for your mortgage insurance. If you applied those extra savings to paying down your mortgage, you'd pay it off years sooner. Look, we've made it really easy to find out more. You can just click on the link and get your insurance quote, and you'll see instantly how much you might pay for insurance coverage that you own, not the bank, and that you can be certain will pay your family the money you planned for them when you need it the most. give it a look. It doesn't cost you anything. All you have to do is enter a little bit of data to get the information that you want about how much coverage might cost you if you got personal insurance. Now, before you run out there and cancel your terrible mortgage insurance policy, if that's what you've got, don't cancel anything. Unless and until you have new insurance coverage in place, never cancel your existing insurance coverage. So take a look, check it out. You can have a instant response as to what it might cost you for personal insurance. If you're not sure how much you're paying for your mortgage life insurance, and that's often the case, there's a couple of ways you can find out. One is, when you get your annual mortgage statement, there should be some information on there about your life insurance coverage that came with your mortgage. Also, it should be appearing as a separate line item on your bank statement. Now, maybe not. It's not always the case, but quite often it is. And so you'll see that when your mortgage comes out, your mortgage life insurance payment would be coming out as well. And you can see exactly how much you're paying there. Go and compare that using our life insurance coverage tool. Just enter the amount of your current mortgage balance, right? Maybe you're one of those people that started with the $250,000 and you're down to $150,000 now. Well, for sure, if you're reasonably healthy, you're going to save a big pile of money over what you're currently paying on your mortgage life insurance. If you want more information, ping us, let us know. Put something in the comments, send us a personal message. Go to here on our page, you can send us a quick hello. We're happy to follow up with you, and you can do it through our website too. There's lots of ways to get in touch with us. You can always just contact us directly, info@macbethgroup.com. That's info@macbethgroup.com. We'll get back to you right away. We've been working on this. We've been working on a special project for months now because we want to go on the warpath against this ridiculous amount of extra money that Canadians are paying unnecessarily for their mortgage insurance coverage when the coverage is sketchy at best. So you're going to hear a lot more from us about that in the coming weeks and months because we're going to town on this. We've done a lot of research. We've checked out all the insurance companies and found out where the best deals are. Anyway, thanks for spending this time today.